time will be there. We are going to analyze how the examiner tested your friends who have just done the exams, what they tested, what are the key areas that we expect to put more efforts on as we now start our session for this. Time will be there. We are going to analyze how the examiner. We are also going to look tested your friends who have just done the exams. How do they test what these they questions? Tested? Are they really complex? What are the key areas that we expect to put more efforts on as we now start our with this session for this? Time will be there. We are going to analyze as we start our class. We are also going to look at your friends who have just done the exams. How do they test what they tested? Are they really complex? What are the key areas that we expect to put more efforts on as we now start our with this session for this time we are there. We are going to analyze and start our class. We are also going to test that your friends movement and ready. How do they test what they tested? Are they really complex? What are the key areas that we expect to more efforts on as we now start our accounting session for this time we are there. We are going to analyze and start our class. We are also going to test that your friends movement and ready. How do they know what they tested? Are they really complex? What are the key areas that we expect to more efforts on advanced management accounting for last time we are there. We analyze start our class. We also look at your exam management and ready notes tested. Our first time what are the key areas that we expect to more we have 10 topics management accounting been able to see the course there. Start our class. Topics that we have. Those are some of the topics that we have. Those are some of the topics. No sound on my side. Please confirm if you're able to hear me from your side. Is my sound okay? Is my sound okay from your side? Is my sound okay from your side? Then Canon, just try to check at your mic. Try to check your mic. Try to check your mic, please. Try to check your mic. Okay, so I believe my board is now okay from your side as well. Good. So within this, we only have today. We only have today and almost that is today, which is 5th of September 2023, all the way to, let's say, around 15th of December 2023. So within this short time here, we are expected to cover the 10 topics. We are expected to cover the 10 topics. Now, this is what we need to understand from day one. This is what we need to to understand. So let me just mention the topics, and then from that point, we'll be able to understand what is going on. So this topic number 7, we have marginal and absorption costing. Topic number 8, we have break-even point stroke CVP analysis. Topic number 5, we have activity-based costing. Our topic number 4 is cost. This one here is cost estimation. This one here is classification of costs. This one here is cost accumulation. Then we have number 6, product costing. We have topic number 9, that is budgetary control. We have topic number 10, that is standard cost and variances. Standard cost and variances. Then you move to our first topic. If you've been able to go through the course outline, are you able to identify the first topic? Are you able to identify the first topic? I think I shared with you the course outline. Our first topic. I just have my course outline with me. Context of management accounting. We can call it context of management accounting, introduction of management accounting. So that's why you're going to look at some things that are very basic. Let me get my copy here. So these are the topics that we need to cover. And of course, in our today's session, so we have the context of management accounting. You can call it introduction to management accounting, because from that point, context of management accounting. It is from this point that you're going to do what? It is from this point that you're going to know what is this management accounting. So we are going to define management accounting. We are going to know the objectives of management accounting. We are going to understand the importance of management accounting. How does it relate with other subjects? How does it, or what are now the advantages? Why did it come into existence? Was there some concept that was being used before and it got some problems, and that's why management accounting was introduced? Something of that kind. We are going to do it in our topic number 1. So this is the funny thing about this particular unit. You can avoid to attend the classes for the context of management accounting, then you attend the class for topic number 3 to number 10. By just doing that, you'll be able to understand what topic number 2 is talking about, what topic number 1 is talking about. Why am I saying so? Because it is whatever you are going to learn here in theory, the definitions, the context, the classifications, Whatever is going to be given in these first two topics in theory, you are now going to do them practically or apply them in topic number 3 up to topic number 10. So that's basically what you are going to do. Because if they are going to ask you about the importance of management accounting in topic number 1, they give you a question that is, give us 5 importance of management accounting. When you come to topic number 3, cost estimation, how is this cost estimation applied in the practical life environment? By just telling us the application of cost estimation, you've given us one of the functions or importance of management accounting. When you come to cost accumulation, how is cost accumulation contributing to the success of a business? Then automatically we've given us point number 2 for the importance of management accounting. If you come to topic number 3, activity-based costing, remember here you're going to discuss about the traditional costing method and the activity-based costing. So by just telling us how this activity-based costing has improved the performance of business or classification or calculation of costs within the production sector of a company, then automatically you are answering our question in topic 1. The same applies to product costing, marginal and absorption costing. And we all know that you are either applying marginal or absorption costing. So how are these important to us? The way they are going to help you to deal with your management or production department, then you are giving us the importance of management accounting. If you come to break-even or CVP analysis, when you come to this part, you want to tell us the quantity that you're going to produce for you not to make loss or for you to now understand the profit that you're going to charge. By just understanding that, you are giving us some hints on management accounting, which is the importance of management accounting. When I come to budgetary control, I believe all companies has got a budget. Even the country has got a budget. So from that budget, they're able to know, do they have a deficit or surplus? If they have a deficit, how are they going to finance this deficit? After having the budget, you do your performances of the transactions, or you follow whatever is in the budget. Then at the end of the day, or at the end of that particular period, you'll have now to sit down and understand, in this particular budget, this is what I prepared. This is the actual performance. This budget here will help me to know the amount of money that I need to borrow to finance my deficit, or how am I going to invest my excess or my surplus in the budget so that I get what? I get more interest or profit under budget. If I come to topic number 10, remember a budget is like a standard. You've just set an estimate. Within that estimate, you're going to have it there. Then having done everything, the actual outcome also will be presented. So you compare your estimate or the standards and the actual result. From that point, you'll be able to get these items called variances. The variance can be either adverse or favorable. It can be adverse or favorable. So from that particular point, remember, you are still giving us the points on importance of management accounting, which you are going to discuss in topic number 1. If you come to classification of costs, in topic number 3, you're going to apply some of the methods or discuss some of the methods here, whereby you'll be required to know the classification of costs based on variability. So that is point number 1 here. We are going to discuss it in topic number 3. Cost accumulation, again, you are now doing the cost based on functionality. Material cost, direct labor cost, production overhead cost. Again, you are now going to do what? Discuss it here. When you come to activity-based costing, we have the direct cost, and then now we have the apportionment of the overheads. The overheads, again, in topic number 5, still taking you to classification of costs. When I come to product costing, there are those costs that are used in the production of goods and even the overheads. So here, you're even going to get something called conversion costs. This conversion cost entails direct labor and production overheads, production overheads. And then here we have direct material. Remember, direct material, if you add to direct labor, you are giving us what we call prime cost. But then it is now taken that when I have my direct material, any cost that I'm going to incur to transform this direct material into finished product is what we call conversion cost. And that's why our direct material here, or direct labor and production overhead, or any other direct cost that is incurred to transform this direct material, is normally called conversion cost. So those type of costs, we are going to meet them in topic number 6. When I come to topic number 7, we have marginal and absorption costing. Under this, the only difference is going to be how you're going to deal with the production overheads. And that production overhead is the fixed production overhead. It again takes you to topic number 2, classification of costs based on variability. When you come to this point here, break-even point analysis, again, you have to understand that it is not going to be fixed production overhead. It is not going to be fixed non-production overhead. It is not going to be variable production cost or variable non-production costs. Here, we only know 2 types of costs. We are going to deal with either fixed cost or it is variable cost. That is what you need to understand when you are doing your topic number 8. Still taking you to which topic? Topic number 2, under classification of costs. When I come to topic number 9, budgetary control, I want to produce, or I know how the market is. So I know that the annual demand of goods in a particular market is 10,000 units. These 10,000 units have been given, or I've done my analysis. Just a minute. I've done my analysis, and the marketing department has said, or the sales department, that we need to sell 10,000 units. These 10,000 units that the market will demand, from that point, we need to understand how many units do we want to sell? How many units do we want to have in our store? That is finished product, maybe for any emergency. Then, from that point, how many units do we have in the store as at today? By having that particular data, you'll be able to understand that you are going to get the quantity that you now need to manufacture. The quantity that you now need to do what? To manufacture. Once you know what you need to manufacture, you now go to the production department and now do the requisition for raw materials. How are you going to do it? This is the units that we need to produce. I multiply by the raw material per unit for me to get material usage budget. Once I have the material usage budget, I need to understand in the production department, how many units of raw material do they need to have in the store at any given time? We add it to the material usage. Then, if you get the data that they normally need, you less whatever is already in the store as at today or as at the budgeting date. When you do that, you'll be able to get now the purchases budget, the quantity of raw material that they need to purchase. And then now, that is what you transferred to the procurement department so that they can do what? They can outsource or source for the raw materials for the company to do all that. So it means in topic number 9, we are going to understand that when you're going to come up with a budget for the raw materials, you don't start it from the procurement department. No, they don't know what you are going to do. They do not know what you are going to do. Requisition starts from the market. What does the market demand? What do we need to have as a stock, as a spare in the store? From that point, I now go to the production department. What do they need to avail the demanded quantity of raw material, of finished goods? Then from that point, they will tell you the quantity of raw material. Having known the quantity of raw material that they need, you take it to the procurement department to go and purchase that particular raw material. That is first version or one side of the budget. Another side, you now have maybe a company, you are going to make sales, you are going to do what? You are going to purchase raw materials, you are going to pay for expenses, you are going to pay taxes, you are going to pay rent, you are going to depreciate your asset. So if you're going to come up with what we call cash budget, this cash budget will not include anything that is not cash unless it is changing to money, unless it is money. And we are also able to understand that it does not mean when I made sales of 10 million, if you make sales of 10 million, maybe in the month of August, is that it does not mean that in the month of August when you sold 10 million, you are also going to have cash. You're also going to have cash of 10 million. It does not go that way. You will not tell us that you have cash of 10 million in the account. No. Because remember, out of this 10 million, there are those people who pay on cash basis instantly. They pay and then they come for the goods. Out of this 10 million, there are those people who normally promises to pay 1 month after the month of purchase. They are also part of 10 million. Within this 10 million, there are those people who promise that they are going to pay you in 5 months' time. In 5 months' time from August, you cannot tell us that you received cash of 10 million when you sold your goods. No, it will not work that way. You have to count the number of months from August, the 5 months, and you are going to get that maybe you'll be receiving this money in the month of around maybe February 2024. But you made your sales in 2023. So you cannot tell us that on August, you add 10 million in the account because you sold 10,000 or 10 million goods. You have to take care of that. Then within this 10,000 also, there is this 10% who normally comes for the goods, but they don't pay anything. They are the bad debts written off. So the bad debts written off can also not be part of cash. It is written off. We are not going to receive any money. So it means our cash must be adjusted depending on the amount that we actually received and when did this amount hit our bank account as a company. So we have to understand that under cash. You're also going to be given under expenses. You'll be told that they also depreciated, or selling and administrative expenses includes 5,000 for the depreciation of plant and machinery. Remember, there's no single day that you are going to tell us that you went or you wrote a check as a company, took it to the bank to pay for the depreciation expense. That has never happened. You cannot tell us that you've written a check of 5 or 50,000, taking it to the bank to do what? To pay for the depreciation expense. No, it is only charged in the income statement as an expense for you to see now the amount that is distributable. It's just a wear and tear expense or adjustment. So you cannot pay for it. You are not going to write a check. So if it appears anywhere in your expenses, you have to eliminate it for you to get the real cash that was paid out. If you can recall what you did in your FA or financial reporting, cash flow statements, remember you are using the indirect method, you are taking profit before tax, and then you are doing adjustment for non-cash items. You are able to understand that there was that depreciation which you are adding back. Why are you adding it back? Because it was reused to reduce your profit. Yet it is not a cash item, and that's why you are supposed to do what? You are supposed to add it back for you to take your profit to the right place. That also will apply here. If you have any expense that includes depreciation, that includes non-cash item, we have to do what? We have to deduct it from that expense, and then we'll be able to get the real cash. That is topic number 9. If you come to topic number 10, the standard cost and variances, please, even before I mention anything about it, as from today, ensure that you understand this topic, because it will not miss in your exams. This topic number 10 will not miss in your exams. And they will be asking you very simple things. Remember, we have standard cost. You have what we call this standard cost. You are going to be given the standard cost card. So we have a standard cost card of maybe product X. You need to have direct material, direct labor, then you get your prime cost. Then you add now overheads. These overheads, we have variable, we have fixed. So when you have your direct material per unit of that, you get your prime cost, variable cost, fixed cost. Then you're going to get what you call product cost. You have it there. Now, with the standard cost card and the actual results. So actual results. So actual results will also be containing direct material, direct labor, overheads, that is variable and fixed. Then you get now the actual product cost here. So you're going to have this and this one here. It means with the actual results and the standard cost card, we can be able to get what we call variances. We can be able to get what we call variances. And remember, these variances can be adverse or favorable, whereby adverse is negative, favorable is positive. So the examiner, this is what the examiner normally does. The examiner will be giving you one of the three, two of the three. You're either given actual and standard, then you are required to get variances. Or they give you variances and actual. Then they want you to do what? To get for them the standard. To get for them the standard cost card. So we are going to look at it, how they tested the last sitting paper. Then from that point, we'll be able to understand what we now expect, what we need to put more efforts on as we move forward. So this topic number 10, it is not going to miss. There is no doubt about it. So we just need to do something about this topic number 10 as early as today. As early as today. So I believe that is it for that topic number 10. I've clearly explained what you should expect. Then if I now come to topic number 3, this is what you should expect. Topic number 3, cost estimation. Under this cost estimation, you need to understand these basic things. We have regression, analysis, or least square regression or method, or simple regression. That's the name of that method. Then we have ILO method. Then we have graphical. Then we have accounts analysis method. Then we have the very last one here, engineering method. In the cost estimation, this one here is the introduction part of it, where we normally have only one independent variable. And the final output of all this is equal to y equal to a plus bx. Y equal to a plus bx. So when you're going to do your Roman 1, Roman 2, 3, and 4, your final output must be this, y equal to a plus bx, whereby y is the total cost, a is the fixed cost that do not change, b is the variable cost per unit, then x is now the activity level. That is what you have. That is what you have for this one here. Now, the regression analysis or least square method, you need to understand this one here, Roman 2, Roman 3, and Roman 4, you need to have this. Roman 5, you need engineering tools for you to be able to work it out. But what you are going to do at this particular level, you need to understand, are you able to describe for us what engineering method is? Are you able to give us the advantage and disadvantage of engineering method? That is all you need to know about it. Explain to us what engineering method is. Explain to us the advantage and disadvantage of engineering method, so that you will be able to do it. These other methods here, you need to know the practical, the calculation. Are you able to understand? When you are told to use ILO method, what do you need to understand? What do you need to do? When you are told to use regression analysis method, where do you start from? What are you looking for? What are you going to do? If you are told to have graphical method, what will you be looking for? So we need to, that's what you need to cover in this particular area. And of course, advantages and disadvantages of all of them should be at your fingertips. That is topic number 3. Topic number 4, remember, we said that once you do all these other topics, topic number 2 will be the simplest topic. And that's true. If I come to topic number 4, cost accumulation, I've estimated the cost in topic number 3. In topic number 4, I'm going to accumulate this cost. I need to understand under cost accumulation, what do I have under direct? Under direct material, the material cost. What do I need to understand under the material cost? Under direct material cost, I'm going to buy raw materials here. And the raw materials that I'm going to buy, I need to understand at what quantity should I buy this raw material so that I don't incur a lot of cost when I'm going to store them, or I don't miss business because I have insufficient stock. So we are going to do what we call economic order quantity. Economic order quantity. We are going to do this. Another thing, when I'm going to remove goods or inventory, so that's direct material, I bring the raw materials to the product, then to the company, then I have what we call now the inventory. Under inventory, I need to know the stock level management. The stock level management, I need to have reorder level, maximum order level, minimum order level, and then number of orders. I need to understand that. And then for direct material, this is economic order quantity. When I'm going to buy the raw materials, how many units should I order? When now I'm not buying, I just want to do production. Still under production, I need to understand that how many units should I produce at any given time for me not to have excess or for me not to have a deficit. So in the place of economic order quantity, whereby this person is going to order the goods, when they are producing, we now call it economic batch quantity. Economic batch quantity. That is what we are going to discuss here under stock level. Then after that, remember we are still doing direct material. Then we come to direct labor. Direct labor. This direct labor, remember some companies pay people based on the number of units that they have produced, the number of hours that they have worked, or just a fixed amount. So long as you report to work, at the end of the month, we are going to give you this amount. Whether you've worked for 1 hour for the entire month, whether you've worked for 1 week for the entire month, you have a fixed salary. That those people are being paid based on the units that they have produced. If they have produced 50, you take 50 multiplied by the basic rate per unit. There are those people who are paid based on hours. If you're going to have, or maybe the agreement was, you're going to be paid 5,000 for every 2 hours. After working for 10 hours, you take your amount. That is the number of hours worked multiplied by the rate per hour. That is another way of compensating employees here under direct labor. Under that, there are those people who are paid based on hours. The hours that are being paid here, there's somebody, we have person A, person B, they are going to produce units. So this one here, managed to produce 100, 90, 77. From this point, you're able to get time worked. Somebody worked for 50 hours, 45 hours, 60. Then, from that point, you'll be able to understand that the time allowed for them to work is 40 hours. But somebody worked for 45 hours. Time allowed to work is 40 hours. Somebody worked for 35 hours. So it means somebody saved the company. If you saved the hours of work, you are entitled to what we call a bonus. If you worked beyond the normal hours, then you're going to be given what we call overtime. So for you to get the total salary that somebody should be paid, it is that basic rate plus bonus, that is on the time saved, plus overtime. And remember, somebody can have the three. Somebody can have basic, they be entitled to bonus, and again, you have overtime also added to that. You can have the three, depending on the nature of the question that you are going to tackle when we reach there. So that's another concept that we need to understand under direct labor. After compensating these people, you now need to get what we call the overheads. These overheads, what you're going to look for is, remember you've set a standard, you have an estimate, so you have your overheads. The estimated overheads, when you compare with the actual overheads, you are going to arrive at what we call overhead absorption rate. The overhead absorption rate. And from this overhead absorption rate, you need to understand or tell us, was it over or under absorption? Was it over or under absorption of overheads? That is what you need to understand in that particular area. Then, within the same space, because we are now going to learn that the overheads, we now want to get the total cost. Remember, it is cost accumulation. What is the total cost of producing one particular unit? Then, you now need to do what? You now need to do the allocation of these overheads by use of, that's the first one, you're going to have primary allocation. That is the overhead sheet or schedule. You have to do the primary allocation. Then, under secondary allocation, we are going to do the reapportionment. We have service department A, B, or production department, then service department X and Y. I must take the expenses in the service department, take them to the production department, because this is where we have units that were produced. And then from here, we'll be able to get cost per unit in the production department. Doing this, the reapportionment of the overheads is done by use of two methods. It's done by use of two methods. And what are these two methods? We have repeated stroke stepwise, or continuous allocation method. Or you can do that by use of algebraic or simultaneous method. So we're going to do that at the very last part of this topic number 4. And once you've been able to do that, when you get to your topic number 5, under activity-based costing, we've touched something on overhead. It is extension of what you've covered in topic number 4, the last part, to this area. We, of course, will be given the direct or prime cost, which we've said entails direct material and direct labor. Then after getting prime cost, you now need to come here to overheads. You need to come to overheads. So these overheads, we are going to have what we call allocation basis. For example, one of the overheads happens to be canteen expenses. Then the allocation basis here, you have what we call department A, B, C, D. Then we have now number of employees. Then we have number of requisitions. So number of employees, we have 10, 12, 13, 15. Here we have 4, 4, 6, 4. Something of that kind. So it means when I'm coming to allocate, I have canteen expenses, I have requisition cost, I have depreciation of machinery. So I have the amounts here, 40, 70, 40, to give me 150. So the methods that you are going to apply under activity-based costing, there's that traditional costing method, whereby you'll only be told that assume the company uses number of employees to allocate the overheads. They're using number of employees to allocate the overhead. So it means we are going to look at this number of employees. We have 10 plus 12, that is 22, plus 13 will be 35, plus 15 will be 50. So for me to allocate my overhead of 150, I will take, for me to get now the overhead absorption rate, remember again taking us back to topic number 4, I will take 150, then I divide by the 50 for me to get the rate as 3 shillings per number of employee. So if I go to department A, what portion of this overhead will they have? It is 10 by 3 to be 30. Department B, so A, B, C, D. So A will be 3 by 10, which is 30. 3 by 13, 39. Sorry, by 12, 36, 39, and then 45. So I've allocated this overhead. That is using what we call traditional costing system. Activity-based costing will do that for every suitable allocation basis. For example, canteen expenses will depend on number of employees. Requisition cost will depend on number of requisitions that were made. Depreciation of machinery will depend on net book value of this particular machinery. That is topic number 5. So we're going to cover activity-based costing and traditional costing method or system. When you come to topic number 6, product costing, very interesting. You can remember where you normally have raw material, you bring it here, you have units, you have amount, direct labor, then production or overheads, you have them there, then finished goods account, you are taking it to the finished goods account. Then you have what we call normal loss, something of that kind. So what will be the cost per unit of this product? We are going to do it in the product costing. And again, we have those joint products whereby I only bring in one raw material, crude oil stroke petroleum. I only have crude oil or petroleum, bring it to the factory as a raw material. At the end of it, I'm going to have what we call kerosene. I'm going to have diesel. I'm going to have grease. So these ones here, remember the input was just one. This one here was the input. Our output is now these three. Now, if the input was costing 45 million, how will I know that kerosene will take 10 million? Diesel will take 20 million. This one here will take 10 million or 15 million. How will I know that? How will I compare when the units of output? When units of output, I have this one here, 40 liters. I have maybe 13 kg. Again, now we have different measure units. Then grease here. Sorry, this one here is liters. Then grease now is what I have as 17 kgs. How will I now share this cost amongst this product when they have different quantities and even different units of measure? We will understand that when we get to topic number 6. When you come to topic number 7, we have marginal and absorption costing. The marginal and absorption costing is basically going to be different at just one particular point. How are you going to treat the fixed production over the fixed production overheads? How will you treat the fixed production overheads? So that is basically what you are going to understand here. Marginal costing says that fixed production overhead is part of product cost, while fixed production overhead is going to be taken as operating expenses under marginal. Absorption costing says that this fixed production overhead becomes part of the product cost. Break-even point analysis, CVP analysis, it only knows two types of cost: total fixed cost over selling price minus variable cost, which we normally call contribution margin. That is only what we need to understand here. Of course, this one here, we are going to look at the break-even point in units, in shillings, for one product and also for multiple products. So that's what we are going to do. That's also what we are going to discuss when you get to this topic number 8. When you get to that topic number 8. So are we together? Are we together up to that point? Have we seen the nature of what we are going to do? Have we seen the extension of what we expect? Have you seen the extension or the area that we need to cover within these few months? So that's what you are expected to have. That is what you are expected to do for you to be able to pass your management accounting paper. So I just want us to do a very simple thing before we end. If you can access the link for the last sittings paper, it is there in our group description. I want us to just compare look at what we have in that particular paper with what we've just discussed. Then we get to understand what is actually going on. Are we on the right track, or we are doing our own things? Let's get to understand. So just get that link. Let's get that link. Let's get that link. The last sittings paper, if you can access it, please let me know. The last sittings paper, if you can access it, I'll be very, very happy. So for those who are not in our paid classes, you are joining this as a free class. Please, you've just seen this by yourself. We've started, we've done introduction, we are moving forward. There is no time. You should not wait for the let me see if I can get the link. You should not wait for the results because time is not there. Just pay something that is 1,000. As you wait for the results, you will be able to add. You'll be able to continue the classes by just paying 1,000, so that when the results are out, you top up the amount and now get to the class fully without having missed anything. Time is not there and we have to move very fast. Time is not there and we have to move very fast so that we start our revision as early as possible. So let me see if I can share that link to you. So you can now open the link. Please open that link. Just click on the link, get to CPA, then 2023, get to August, CPA 2023. So once you get to CPA, we get to 2023 there. Then we get to August. And once you click on August, look for CA25. Look for CA25, that is management accounting. So please, you let me know once you get to that point. Remember, you are getting this free class from RCM Online College. So those, that is a pay bill. Then account number, if you are specifically paying for management accounting or fundamentals of management accounting, just indicate MA and you'll be able to get to the class. Amount, if you are sure you are supposed to be in this class, or you just want to wait for the results for you to now know you are fit, you just pay commitment fee of 1,000. If you know very well this is what you have been waiting for, the results, whether they are out or not, you are sure you are going to do your management accounting paper, then it is not bad if you just pay the full amount of 4,500 and then you get to the class. Of course, if you don't have 4,500, then it is also very simple. You just pay half of the full amount and still you'll be added to the right class, that is management accounting, so that you move together. The reason why it is advisable that you join the class as early as today, remember, by the time the results will be out, maybe next month, if that will be the case as the trend has been, we are going to miss around 4 to 5 lessons. These 4 to 5 lessons, let's work with 5. You need 2 hours to watch them. That is going to be 10 hours. You are busy with other courses, you are busy with other subjects, you are busy with other activities, maybe you're also working during the day. Will you really remember, after covering these 10 hours, we shall be continuing. We'll not be waiting for you to complete the 10 hours. then we now move together. No. So the moment we leave you at this particular point, it will be very difficult for you to recover the 10 hours so that you be at the same point with us. So the only shortest way or the simplest way to avoid this challenge, please just pay a commitment fee of 1,000, then you get added to the class so that you proceed with your lessons as you wait for the results. Any inquiry related to this, just reach us via 07 19 525,000 or 07 93 555 000. Just do your inquiries via these two numbers, 0719 525,000 or 0793 555 000. Pay bill is this, account number is the management, accounting or MA, and then you pay the commitment amount and will automatically be added to our paid group. Is that clear? Is that clear before we proceed to looking at what was now tested? Is that clear? Is that clear to all of us? Is it making sense? Is it making sense? Is it making sense to all of us? Okay, so once that is done, I believe you've been able to take the number. If you have any inquiry, you can just reach those two numbers and you'll be assisted. You will be assisted. Okay, so I want us to now look at that paper, believing that you've been able to see it. I want us to look at that paper. Have you been able to see the paper? Have you been able to see the paper? Have we been able to see the paper so that we discuss it together? We see what? No. I've just shared the link in this meeting, please. Nelson is saying he has not been able to see the paper. Nelson, just follow that link. Nelson, just follow that link. Nelson, follow the link and then you let me know. Nelson, confirm. Nelson, have you now seen it? Have you now seen the paper? Nelson bado sasa hajaanza kuongea. Nelson, have you been able to see the paper now? Okay, you can just check as well. I'm sharing my screen there with you, so I believe you are also able to see it. Okay. So if you look at that particular paper, we want to analyze and understand which topic were they testing, which concept were they testing. So just allow me to have a 2 minutes, take care of something here. Okay, so now if you look at that particular paper, it normally has 5 questions. 5 questions. 5 questions that are normally there. 5 questions. So if you look at the first part, we are being told to do what? Explain 3 limitations of financial accounting which are addressed by management accounting. That is topic number 1. If you look at management accounting, so first of all, financial accounting majorly deals with historical data. And that's why management accounting was brought in to help us do what? To help us do the forecasting of future items. If I do financial analysis, let's say I want to compare financial statement of the last 2 years, and then use that. Can I use that as the projection for the next financial year? The answer is no, because maybe in the last 2 years, there was a problem. For example, if you want to base your projection on the performance of a company in the year 2020 and 2021, when we had Corona, then automatically you are going to be lost, because those 2 years have different dynamics or different approaches of doing business within the market. If I use that in today's market, then automatically I will be lost. So that's a limitation of financial accounting that has been solved by management accounting. Again, the next thing, if you look at management accounting, it helps us to do forecast, to do analysis. Are we able to come up with a projection so that when we are going to do our performance, we are guided? Automatically, management accounting is again solving that limitation. Management accounting has got no standard because it is just being prepared in the language that is understood by the users, which is basically the management. Financial accounting, you must follow a given standard. You must follow a given procedure so that you present this financial statement. And they maybe getting those people who are trained to do the financial accounting or prepare your reports as per the financial accounting requirements will be so expensive, because maybe these people are limited, and acquiring such people increases the labor costs within the company. Another limitation that has been solved by management accounting, so long as it's understood by the expected users, then automatically you don't need to look for an expert who will be requiring a lot of money from the company. So that's topic number 1. It means as we now move forward for our next sitting, we expect a question from topic number 1 to tell us now to give the differences. Of course, this one here looks like differences because the limitations will tell us that with the financial accounting, this and this happened. But now with management accounting, it has been solved. It's as if you are comparing. Then maybe going forward, you are going to be asked to give us the objectives of management accounting, importance of management accounting, give us the similarities between management accounting and cost accounting, or management accounting and financial accounting. So just try to look at those other parts within that topic number 1 as you prepare for your exams. That's our prediction as early as today. Number 2, distinguish between cost center, profit center as used in responsibility accounting. The cost center, profit center, you are going to do what? You are going to understand them when we get to topic number 4. Partial topic number 4, the last part, and also topic number 5, where we have activity-based costing. The allocation basis that we are talking about, we are going to discuss them there in topic number 5. The cost center, responsibility center, the unit center, or whatever, things of that kind. You want to know the amount you're going to incur, the batch, production batch, such kind of things, cost per unit. How do we calculate that? What is prime cost within that context? So you'll be able to get that in the topic. So this one here is a question from specifically topic number 4. So you're able to see topic number 1 in question 1. They have tested topic 1. They are again testing topic 4. Then question C, the management accountant of Unga Safi Millers has presented the following data on machine hour and electricity consumption for the last 6 months. So we have month, machine hour, electricity. Required, using ILO method of cost estimation, develop a predictor equation in the form of y equal to A plus BX. Determine the total electricity expense at 120,000 machine hours, then explain two limitations of adopting ILO method in cost estimation. I just mentioned that. That is topic number 3. Then they were done with question 1. Let's go to question 2. What did they do in question 2? Number 1, explain 4 reasons for budgeting in a business. They have moved all the way to topic number 9. Then, Tazam Limited is developing a cost accounting system. Initially, it has been dedicated or decided to create 4 centers: accommodation, deals with guests, kitchen, prepares meals, while tours and entertainments are internal service recreation centers. The following overheads details have been estimated for the month of August 2023. So we have type of overhead, that is rent and taxes, general lighting, indirect wages, petrol and engine oil, depreciation and tour buses. The following information is also available. So we have rent and taxes. How are we going to allocate rent and taxes? I think I just demonstrated that somewhere here. Are we going to use direct wages as the allocation basis? Are we going to use floor area as the allocation basis? Are we going to use the value of tour buses as the allocation basis? Look at what they're asking you to do. Prepare an overhead analysis statement showing primary allocation to each center. Topic number 4. The last part of topic number 4. Then secondary allocation of the internal service recreation centers cost to production departments using simultaneous method. We have simultaneous method or algebraic method, and then we have stepwise repeated or continuous allocation basis. So if you look at that, if they have to test that question next sitting, they're basically going to tell you to do what? They're going to tell you to now do something about continuous allocation basis, to now give us over or under absorption of the overheads in topic number 4. If they have to test a question from topic number 4, they will now ask you to give us direct labor costing. We want overhead, we have units produced, we have taken, we have hours allowed. A normal working week has got this number of hours. Give us the total wages payable. That's what we now expect again if they are supposed to test a question from topic number 4. Then that is the end of question number 2. Let's go to question number 3. Question number 3. So we have 3A, of course. We are being told that Urembo Lifestyles offers 3 different types of body, grooming, and fitness services. These are salon, gym, and barbershop. Using the same staff, various estimates for the next year have been made as follows. We have salon, we have gym, then barbershop. We have service fee. So here service fee is basically what we call the selling price. The selling price can also be called average profit per unit. Average profit per unit is the same as selling price per unit or average revenue per unit. Then we have variable material cost, variable labor cost, fixed overhead cost, labor hours per client, additional information. Let's look at Roman 1. If the business were to offer salon services only, calculate the break-even point. Number of clients. What are they referring to? Topic number 8. When you come to Roman 2, prepare limiting factor mix schedule to show the number of clients per service that maximizes profitability. Topic number 8, an extension of topic number 8. So they are already testing us on the limitation, that is the mixture. Which one will maximize? Which option will maximize? Which option will maximize? Which mixture are we going to have to maximize the profit of this particular company? So the break-even point analysis, we expect them now, because they have actually exhausted that part, unless they bring multiple products, we expect them now to test you on a theory question. Assumptions of break-even point analysis. Are you able to tell us that in topic number 8 as you wait for your exams? Then we have part B. Sigma Limited operates a standard marginal costing system. The following data has been collected for the month of July. So we have actual cost incurred, variances. Remember what I said? If you have actual cost and variances, they're going to request for standard cost. If you have standard cost and actual, they're going to tell you to do what? Calculate variances. Which topic is that? Topic number 10, which I said will not miss. Even this upcoming sitting, we expect it to be there. They're just going to shift. This time round, there's a high chance that they're going to give you now what? They're going to give you actual and standard, then you calculate variances. So that's what you expect there. And you need to prepare as early as today. Then we now get to question number 4. Question number 4, explain 3 factors that might be considered before choosing suitable methods for labor remuneration. Again, topic number 4, under cost accumulation. Then we get to part B. Mass Bottlers Limited manufactures and sells 4 products. Detail of 4 products and relevant information are given below for the month of August 2023. So we have output in units, we have machine hours per unit, production runs, requisition rates, orders executed, cost, whatever. Look at the question now. Required a budgeted unit cost and total cost using conventional technique. Conventional technique is another name of traditional costing system. And because we are moving from traditional, they are going to compare it with the activity-based costing. Which topic is that? Topic number 5. It means in the upcoming sitting, if I were you, then I'm now going to look at the theory. They'll be asking me, give us the procedure of establishing an activity-based costing system. What are the 6 steps of developing ABC? Or what are the advantages of ABC over traditional or conventional costing technique? Or describe to us the limitations of conventional or traditional system here. If you are supposed to, or if they're supposed to repeat a question in topic number 5, that's what you should now concentrate on. Then look at question number 5. Question number 5. 5A, the analysis of total cost into its behavioral elements is essential for effective cost and management accounting. With reference to the above statement, enumerate 4 cost behavior patterns. 4 cost behavior patterns is taking us back to topic number 2. Classification of costs based on behavior. Classification of costs based on behavior. Are you able to give us that classification from topic number 2? Next time they're going to tell you to give us the importance of classification of costs. Give us the objectives of cost classification, or give us the type of cost based on variability classification, nature classification, functionality classification. That's what we expect as we wait for our exams. Then let's get to question number 5B. Adboard Limited produces a product that passes through 3 processes. The data above refining process is as follows. Opening work in progress is given there in units and then percentage of completion. Then we have closing given there, percentage of completion. Units scrapped, percentage of completion. Then we now get to required. Statement of equivalent units of production, statement of cost, statement of valuation, refining process, that is topic number 6, where we are saying about product cost. So here we have been given, number 6, we have been given process account. That's what they have tested. The next thing we expect, give us the salient features or characteristics of process costing. Or they now give us the one that I've just demonstrated here. You are given one input, that is crude oil or petroleum. Then you need to get kerosene, diesel, grease, and then you are told to apportion those costs based on 3 methods. One, based on what we call net realizable value as the apportionment basis, total sales value as the apportionment basis, or units of output as the allocation basis to apportion the costs or the joint cost that these products are going to share here. So that's what we expect if they just have to repeat a question from topic number 6. If they have to test a question from topic number 6, that is what we expect. So why was I taking all that time to mention the topics that were tested and all that? This is what I want you to prepare for. So we have how many topics? 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So do we have topic 1 in the list? Yes. Do we have topic 2 in our list? Yes. Do we have topic 3 in our list? Yes. Do we have topic 4 in our list? It is here. It is here. It is here. It is the longest topic. This one here, we are going to take almost the whole month doing topic number 4. And once you know topic 4, the whole of it, you already have something to do with the 50%. So by just doing only topic 4, you are good to go. It contains a lot of marks. It is the longest topic. Do we have topic 5 in the last sitting? Yes. How about topic 6? It is here. Topic 7. Topic 7. Marginal and absorption costing. We don't have it. Topic 8. Topic 8, we have it here. Topic 9, we have it here. Topic 10, we have it somewhere here. So before even you now continue with the classes, we've been able to understand that last sitting, that is the April sitting, they tested the marginal and absorption costing. 10 marks, marginal and absorption costing. That was tested, the marginal and absorption costing, that is topic 7. That's why it was eliminated exclusively. But we expected them to give us now a question under the arguments against or arguments for marginal and absorption costing. That was not done. Now, in this upcoming sitting, we already have some 10 free marks. Are we seeing those 10 free marks? Are we seeing those 10 free marks before we do anything? We have this one here. Marginal and absorption costing cannot miss in 2 consecutive sittings. It was tested in April. That's why it did not appear in the August sitting. And now that we are preparing for something, this one here is already 3 marks. You understand marginal, you understand absorption, the calculations, then you have your 10 or even 14. If they don't do that, they bring for you theory. Arguments against, arguments for, marginal and absorption costing another 10 free marks. So this one here, start it from today. When you come to topic 10, there is no doubt about, even if it was tested yesterday and we have exams today, we expect it to be there of at least 10 marks. Of at least 10 marks. So now that we have 20, and for you to pass this paper, you only need 50. We are now supposed to take all these months to look for 30 marks. So there is no selective topic that these people are normally leaving out. They test everything. If it is not theory, it is calculation. If it is not calculation, it is theory. And now that they, remember the other sitting, in this topic number 7, they tested calculation and theory. That's why it was left out 100%. And this time, because it was left out 100%, we expect it to come back 100% the way it is. Calculation and even theory somewhere. So mjipange na hii mapema. So that's what they did in the last sitting. That's what they did in the last sitting. And because I believe there are some people in this particular meeting who are also going to do the ATD paper. There are those people who are going to do the ATD paper, so I just need to avail it for their benefit, that they also understand. They also understand what they are going to meet. Because if you tell them that as early as today, they will be somewhere. Another thing that you need to understand, all of us, for our discussion for these topics, we are going to use 2 documents: the Fundamentals of Management Accounting, past papers, and also Management Accounting, that is CPA, past paper. So we need, if you click on that link again, just get to that link, you click on it, and you'll be able to see, the ATD. You'll be able to see the ATD. You'll be able to see the ATD past papers. Let me see if I can get it here. So ATD, it is called Fundamentals of Management Accounting. Fundamentals of Management Accounting. So I believe you've been able to see it there as well. I believe you've been able to see it there. So the Fundamentals of Management Accounting, another interesting thing, because you're going to use the 2 documents. We are going to use the 2 documents. So this one is Fundamentals of Management Accounting, and this one here is Management Accounting. Let's look at it. Question 1. Question 1, what do we have there? List 4 examples of costs that are related for decision-making process. That is topic number 2. Then part B, we have process 1, process 2, the percentage of normal loss. What do they want you to prepare? Process 1 account, process 2, process 3 account. Again, topic number 6. When I come to question 2, we have actual hours worked, hourly rate, what I was talking about now, the direct labor, required, basic guaranteed time rates, and then piecework rates. That is topic number 4. Topic number 4. So this question number 2. Question number 2. We have topic 4. Then part B, the following information has been given. Now look at what they did in question 2B. Required marginal costing, required absorption costing, 11 marks for the ATD students who did that. So we have topic number 7. Let's go to question number 3. Describe 4 distinguishing features between financial accounting and management accounting. What about for CPA? Give us the limitations of financial accounting, which led to the introduction of management accounting. If you wrote those 2 points, you answered the question the same way. It could have been somewhere, because they want you to give them the distinguishing features between financial accounting, the differences. So we have that one, topic 1. Then we have part B. I think that's a mistake. Part B. We are given that Mwangaza Factory Limited manufactures fluorescent bulbs. The factory has taken a sample of 8 employees from this part here. We have X, we have Y. Additional information. What do they need? The least square regression equation, predict, and if the rejected units cost this, that is cost estimation. Topic number 3. Then we have part C. So we have job A, ABC, then job XYZ. Required, compute the predetermined overhead absorption rate for job A and determine the extent of over or under absorption. Topic number 4. Question 4. Evaluate 4 advantages of centralized material purchasing by an organization. That is topic number 4. The longest topic, remember. So you can also see how it is being distributed. Then question B. Shauri Moyo Bakery Limited planned production and sales for the next 7 months for the financial year. That one. Required cash budget for the 4 months ending this one here. That is topic number 9. When we come to question number 5. Question number 5. Explain the relevance of the following terms as used in management accounting: break-even point analysis, responsibility center, batch costing. That's the definition of terms, which is coming from topic number 7. Responsibility center, topic number 4. Batch costing, that is topic number 4 as well. It extends to topic number 5 partially. So we have again from topic number 4 basically. Then B, analyze 4 limitations of a firm that a firm would encounter when operating marginal costing system. So you've just seen limitations of operating marginal costing system, and then also the question given up there of 11 marks. There's high chances that that question or that topic will not be tested in the upcoming exams for the ATD students, because you've seen they have tested around 11 plus 8, around 19 marks from the same topic. So there's high chances they're not going to do what? To repeat the same thing. If you move to, but of course it is from topic number 7. Question C, calculate the cost per passenger per kilometer per day. That is topic number 6, product or process costing. So remember, product, 7 is already here. Product can be good or service. So in the product, you're going to deal with goods, that is the physical goods, and also services. So let's come to topic 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have topic 10 here. I think ATD has got 9 topics, so that's why we don't have it here. But topic 9, we've been able to see it. Topic 8, that is break-even point analysis. They have just touched on it, the definition there. So we have it somewhere. Then, yes, we have it somewhere here. Topic 7, we've seen it here. Topic 6, I've just mentioned it here. Topic 5, ABC, it was not tested. So we just know, ATD students, we now know what we need to do about this topic number 5. Topic 4 is there. Topic 3, do we have topic 2 somewhere? Yes. Topic 1, I have it somewhere here. This topic 4, so we need to understand something. Even if it was there or not there, this topic 4, it will still be there because it carries around 50% of what you're supposed to do in management accounting and also fundamentals of management accounting. So that's the analysis of what you're supposed to do. We've seen what the examiner has done. We've seen what we're expected to do. You've seen what I am expected to do. What do you expect me to do? Be in class at the right time, provide you with the notes, give you an hint on how to do this, and then you do revision by yourself. So the past papers, I'll be sharing them with you as a merged document for all the sittings from 2015. So when I say we are going to do, or we are covering this topic, you know what you are going to do. Now, another thing, I will try as much as possible that 100% of my illustrations will be from the past papers. So maybe 40% will be from ATD, then 60% will be from management accounting. Will be from management accounting. So I will share a merged document for both ATD past papers and management accounting past papers. Now, after doing that, because I believe you've been listing your emails there in the group, we are going to activate all of you, then you get to LMS. So the advantage that you're going to have this particular group, you'll be able to check a folder there that I've indicated May, August 2023. That's, it has got the past papers, the past videos, the past videos for the last semester. They are so relevant for you. Go through the videos, you check what you need. If you just go topic wise, also you'll be able to see I've listed the videos for each topic. So if you just want to learn ahead of the teacher, get your LMS, go to topic 3 because you're going to start with topic number 3. Go through those videos, try to do the illustration, because even all the illustrations there are from the past papers, which we'll be having maybe today or tomorrow. I'll share the 2 of them there. So just go to your LMS once it is activated. You watch things in topic number 3, you try to do illustration. When I come here on Thursday, we are doing revision with you, while others are learning for the first time. So that's the advantage you are going to have. So you've seen what you are supposed to do, what I'm supposed to do. You now know I don't need to tell you what you are supposed to do. So that at the end of this, by December, you'll be waiting for the exams. Do it and wait for your next unit in the other sitting. So I believe that's enough for today. Remember, those who are joining us for the very first time, those who have not joined the paid group, do that because time is not there. The trade has already left the station. We are not going back. We are moving forward. So do the right thing, join our classes, and then we move forward. If you've not done any payment and you want to do inquiry, the numbers are here. Just reach out. Just reach out to these people. They'll be able to assist you. Reach out to these people. They'll be able to assist you. Yes, the session was recorded, and of course, once it is activated, I will avail it in our LMS. I've just joined you. What have you done? We've done introduction, we've done analysis, and even projection of what we expect to have in our next or in our exams. That's the best procedure. So did you record? Yes, I did that. So I believe that's enough for today, unless you have a question. That's enough for today, unless you have a question that I need to respond to. Any question that I need to respond to? Any question? If there is none, then I just would like us to stop at this particular point. Have a blessed night, and let's meet on Thursday at the same time, at the same place. See you.